Good morning, good afternoon, good evening, wherever you are. Welcome to the satellite event of the Finance Commons Summit. My name is Katarina Fonseca. I work for the Think and Do Tank IRC in the Netherlands, and I'll be your moderator for the next 90 minutes. This session is being recorded, and by being here, you're accepting to be recorded. And the link will also be made available publicly. Today, we have a stellar lineup. It does look like a lot of people, but we will still have 30 minutes for the discussion. We also have a very impressive audience with us here today. You are from about 49 countries, last time I checked. And please use the question box, as we will be compiling questions for our speakers, and some of them, if it's just Q&A, some of them might be answered immediately. So in total, we have 9 speakers, and the session is divided in 3 parts. The first 3 speakers are really going to be setting the scene. What is the role of public development banks in the water and sanitation sector? Why are public development banks relevant in this present context? So our first speaker is Gilles Clates. He has joined the French Development Agency in 2009 as a Senior Biodiversity Program Manager. He has also supported biodiversity conservation programs and protected areas in over 20 countries around the world. Since 2018, he is the head of Ecologic Transition and Natural Resource Department at AFD. Gilles, please go ahead.
Thank you, Katarina, and welcome everyone to this webinar taking place within the Finance in Common Summit. Water drives resilient countries, and this is why we are gathered here today for this webinar, which eventually will really call for a coalition among public development banks to gather our strength and build a water finance coalition. There are around 450 public development banks around the world. Altogether, we commit $2.3 trillion each year, representing 10% of annual global investments. PDBs, as they are called, or public development banks, are a tuggy. They pull finance in the right direction towards objectives of Paris and biodiversity agreement and SDGs in general. The objective of the Finance in Common Summit is really to stress the crucial role of PDBs in reconciling short-term actions with sustainable measures that will have a long-term impact on the planet and societies, and to form a global coalition of all PDBs around the world. This specific webinar or event, as a satellite event to the FIX, is meant to translate this ambition, launch such a dynamic among PDBs, specifically in the water and sanitation sector. As one example of a public development bank, the French Development Agency in the water and sanitation sector is committing 1.3 billion euros of new projects in every year, and especially in 2019, which corresponds about to 9% of our global AFD commitment. And the ongoing projects portfolio is worth 6.5 billion euros, and half of it, more than half actually, is located in Africa. We believe among PDBs that water is a cross-cutting issue, critical to many SDGs. It has a key role to play for climate and biodiversity finance. At AFD, for example, we aim at making sure that 100% of our financing is compatible with the Paris Agreement. All projects, i.e., should really ensure that we are set on a low carbon trajectory. AFD has also the objective that 50% of our finance contributes positively to reducing greenhouse gas emissions and increasing adaptation. Water sanitation in this agenda is absolutely key. It is one of our main contributors to biodiversity finance. For example, 66% of our WASH new commitments in 2019 had a climate contribution. and WASH, i.e. water and sanitation, has more than 40% of AFD adaptation finance. Moreover, just to show you how intricate the subjects of water and climate and biodiversity and ecosystem is, we have decided in the last months at our last board to actually really bring much closer together climate and biodiversity ambition. And for example, our target is to have 30% of all climate finance, including a big part on water, to be actually aligned and positive for biodiversity by 2025. 1/3 of our climate finance to be biodiversity positive by 2025. To do that, we believe that water has a key role to play, and the water in general needs more finance. This for social and for ecological transitions to happen. We believe that public development banks could certainly and should take a growing role for that. Our event today is really meant to be the first, and hopefully the first of many other steps that would really enable us as international actors, national actors, regional actors, whatever the scale we are working on, to really come together and develop our cooperation and our understanding of water challenges and solutions. So I hope that our work today will answer some of your questions. Please feel free indeed through the chat box to ask many questions. And the idea, I think the landing ground of this event is really to try to build progressively a coalition among ourselves to increase the funding for water and to make sure that it's better aligned with climate issues, biodiversity issues, and SDGs in general. I thank you for your attention and wish you a very fruitful webinar. Thank you, Katarina. Back to you.
Thank you for the introduction, Jill. Now we now move more into actually understanding the context. We heard from Jill the Paris goals, we heard the biodiversity agenda, but actually how is this conversation related with the sustainable development goals? So our next speaker is Katarina De Albuquerque. She's the first CEO of the Sanitation and Water for All Partnership, SWA, that aims at creating a global movement to give political prioritization and expand smart finance for the sector. She was also the first UN Special Rapporteur for the human rights to water and sanitation. She's a lawyer and led several human rights negotiations at the UN over the past 20 years. Katarina, over to you.
Thank you, Katarina. Good afternoon to everyone, and what a pleasure to be here with all of you today to address you in this important webinar. I would like to talk about three things in the 5 minutes that were given to me. Number one, about the challenges of reaching the SDG 6.1, 6.2, and the financing gap. Then talk a little bit about how many of us are contributing. And number three, address the what now. Starting with the beginning, as you all must know, we have a financing gap when it comes to the SDGs related to water and sanitation, and there are estimates saying that we need to triple the money that we are investing annually in WASH. So what we need is $114 billion a year. So to bridge the massive financing gap, we need, as Gilles was saying, increases in public investment and expanded utilization of private finance. So currently, there is lack of political prioritization of the sector, especially of sanitation, which leads to lack of funding. Then the existing funding is also very often not used in an efficient way, which in turn leads to a sector that is hard pressed to attract both public and private funding and seen as a drain on budgets, not as an investment. Of course, we know this is not true, but this is how things are perceived. To cope with COVID, most agencies have invested heavily in economic recovery, in SMEs, in health. If you look at the DevEx dashboard, your heart will be broken, because you will realize that the water sector is the fourth from the bottom of the long list of focus areas. So we have been receiving a much smaller share of funding in comparison with other focus areas. And this continues to decrease. I was talking with Katarina Fonseca yesterday or the day before, and talking about a certain country, saying that their priority is health in the context of COVID, and hence they are not prioritizing WASH. So at the start of the pandemic, from the side of our partnership, Sanitation and Water for All, we put together a call to action, a leader's call to action that was signed by almost 100 heads of state, heads of government, heads of UN agencies, bilateral donors, banks, private sector, etc., where we talk about the political prioritization. I think that's where it starts, but also the importance for political policymakers to financially support utilities, for example, to guarantee the sustainability of services, even where tariffs were waived as part of the COVID response. But I think that still here in the context of COVID, we need to do a lot more, and public development banks have not been part of this discussion so far. So from the side of our partnership, which I call the partnership on SDG 6, we work on political engagement, which we think is a soft spot or an Achilles heel, sensitizing heads of state, heads of government, sector ministers, and ministers of finance to make the sector a priority, bring these ministers together. Now this year we are bringing finance ministers together. We brought over 35 ministers last week. Next week we hope to bring, in Africa, next week we are bringing Latin American ministers together, and on the 2nd of December, Asian ministers together. And we want them to focus on the fact that expanding services by strengthening the systems that deliver them is the bedrock of economic growth and sustainable development. For example, next week we are bringing, obviously because we are co-convening the meeting with the World Bank, with the Inter-American Development Bank, but also CAF, which I hope will be the beginning of a long and solid friendship. We also published a handbook, which for ministers of finance, highlighting 4 critical intervention areas with the potential to mobilize more resources, namely maximize value from existing public funding, mobilize more funding, increase repayable domestic finance, as well as innovation, and then least explored approaches. The last 2 approaches, increasing repayable domestic finance and exploring, for instance, climate funds and impact bonds, they need the involvement of PDBs, the public development banks. The handbook, just to tell you, is a compilation of success stories from several countries, demonstrating that this is not a matter of belief or wishful thinking. Countries with effective financial strategies have proven to be successful. It's not all about money. It's about using it effectively. And the water sector has suffered from past failures, but also a lot of successes. To finalize on item 3, what now? Ministers of finance and line ministers need instruments, and they also need to increase the trust in the sector. Countries where we need investments to grow, they need strong accountability processes. They need transparency. They need access to information. They need to eliminate corruption. They need multi-stakeholder processes. All actions that increase dialogue, that increase trust between different actors. And this is much of what SWA partners do. They all fight for this. The good thing is that whatever measures are put in place for water, sanitation, and hygiene will benefit other sectors and vice versa. And of course, these changes increase the chance of investment if the investors know that what they are getting into has been discussed and that their investments will be protected. We also need decent regulation at all levels, not just at the national level. So public development banks need to be part of this discussion. They are the bridge between the much needed patience capital that the water sector needs and the national public targets for the water sector. So let's not lose the momentum. Let's all row in the same direction. And let me say that this partnership that is being now launched is something that is fully aligned with the DNA of the day-to-day work that our over 300 partners do. Thank you so much for your attention.
Thank you so much, Katarina, for this very energetic introduction. We're starting to hear about a lot of goals that the national and public development banks need to reach. And so we go to the last speaker of this first set, Kathleen Dominic. She's a senior policy analyst in the Environment Directorate at the Organization for Economic Cooperation and Development, also known as OECD. So she leads OECD work on financing water-related investments, including coordinating the Roundtable on Financing Water, which is a joint initiative of the OECD with the government of the Netherlands, the World Water Council, and the World Bank. Kathleen, the floor is yours.
Thank you very much, Katarina, and hello to everyone. It's wonderful to be able to contribute to this discussion. Thanks so much for the invitation. Indeed, it's an exciting agenda, and we definitely understand that there are major challenges ahead, but there are also some opportunities. Of course, achieving SDG 6, as we have already heard, will require a historic scaling up of financing for water-related investment. And this requires contributions from all across the spectrum of finance and financiers, including public budgets, beneficiaries, development finance providers, and strategically deploying those resources and funds in a way that can crowd in additional sources of finance, including commercial finance. And here, public development banks have an important role to play. Now, at OECD, we've been doing a lot of work on the green and sustainable finance agenda, and notably, what's quite clear is there's a lot of interest in this agenda from investors. At the same time, we have a heightened attention from policymakers and donors and development finance providers in the interest to connect their lending to drive climate action and alignment with the SDGs. This can be an opportunity for water, but it will require some work to make sure that we're connecting the dots and making the case to make sure that water features there. In the case of the sustainable finance agenda, here we see, for example, this rapid growth in the investment market that's focused on environmental, social, and governance investing, so ESG investing. This has rapidly grown in terms of products, in terms of interest, in terms of investor allocations. And the amount of professionally managed portfolios that now have an integrated elements of ESG in their investment reaches about $17.5 trillion globally. Now, this is driven by the view that ESG issues, including the risks and opportunities, can affect long-term financial performance. And there is an argument to be made there also that water is an important feature in terms of delivering opportunities, but also in terms of managing water-related risks that can have material financial impacts. However, what we see also in our analytical work is that investor allocations for water-related investments remain very modest. For example, recent OECD analysis of green infrastructure shows that of the just over $1 trillion that institutional investors have in infrastructure assets, only about 17 billion is invested in water supply infrastructure, so capturing a very, very small slice of the pie there. At the same time, we have OECD analysis on blended finance trends, looking at the share of commercial finance mobilized by development finance. And over the 2017-2018 period, this amounted just to about a little over 2% of the total, or about 1 billion on average. Again, the story here is a very small slice of the pie. So what can be done? Here I want to share a couple of the takeaways from our work and on the Roundtable on Financing Water that we established in 2017 to provide a dedicated forum for action-oriented dialogue between the water community and also the finance community based on robust evidence. And here a couple of key lessons emerge. One is certainly that the financing challenge is not just about attracting more money to the sector. That's part of the story, but obviously not all of the story. It's also about having a focus on strengthening the enabling environment that can improve the risk-return profile of investments, can ensure that the funding is that's allocated actually delivers benefits. that brings me to the second point around making the best use of existing resources of finance as well as infrastructure assets, and notably ensuring that public expenditure programs at national and local levels deliver those tangible benefits for communities in a cost-effective way and over time. Finally, it's about mobilizing additional sources of finance. So when we're having this discussion around public development banks, I think there's a huge opportunity here to look at how those banks can strategically allocate their funds in a way that can help de-risk investments and also bring other finance providers along with them. So just in wrapping up, in terms of looking forward, I'm very much looking forward to this discussion. We really welcome the launch of this initiative. It's a great way forward, and we definitely look forward to finding ways to join forces on this important agenda on financing water. So thank you very much. Katarina, back to you.
Thank you, Kathleen. Thank you, all the three of you, Jill, Katarina, and Kathleen. We basically, I think I'm also scanning the questions, this whole idea that it's not just about raising additional finance, that there's this whole side of governance that also needs finance, and it needs to be there for finance to be mobilized. Please look, there's a lot of questions for you. I love it when there's questions. It means that you are saying things that motivate people to contribute. So please do check their questions. We'll also come back to the last 30 minutes with the Q&A. So I would like now for you to leave the stage, our virtual stage. And as we move into the second part, I would like to bring in Hamid, Carlos, and Juan to the stage. And in this second part, we are bringing in the examples of the public development banks with concrete examples of mobilization of finance, of actually working in that upstream side of governance as well. We're going to hear cases from Morocco, from Mexico. Carlos, are you joining us on stage? And from Europe. And we're going to hear about what is being funded, what instruments are being used, and actually what are the main challenges and opportunities moving forward. I'm glad to see you all on stage, gentlemen. Our first speaker is Hamid Tawfiki. For the past 10 years, Hamid has been the CEO of CDG Capital, which is the investment banking and investment management arm of the CDG Group in Morocco. Since 2016, he's also the chairman of the Casablanca Stock Exchange. It's a pleasure to have you with us. Go ahead, Hamid.
Thank you, Katarina. Thank you also to the webinar organizer to give me the opportunity to share with you the experience of Morocco. I'm really glad to be here with you. So first, let me just introduce my institution, CDG, which stands for Caisse de Dépôt Gestion. CDG is a Moroccan public financial institution established in 1959, and it has a dual mission. One is collecting, securing long-term saving, and channel them to projects that are important for the development, for the sustainable development of our country. So sustainable development is something which is really rooted in our DNA. So we at CDG, we believe with regard to the climate finance that we need to do whatever it takes, in fact, to finance resilience development and the fight against climate change. We also believe that climate change presents enormous challenges and opportunity for resilient development, making it essential that climate change and development needs to be tackled in an integrated and effective way. We also believe in scaling up effective climate finance in operation for adaptation, resilience, through improving structuring of project. I will come back to this, unleashing innovation and unlocking private investment, and I will come back to this later on. Last, we do also believe in risk sharing, in co-financing, in co-investment for the common good and benefits. So just to give you an idea of the situation of the water in Morocco, as you know, Morocco is a water scarce scarce countries. So it is confronted with dwindling groundwater reserve and a strong dependence on rain-fed agriculture. Agriculture is a sector which represents almost 19% of the GDP of Morocco, but it represents more than 40% of employment if you take the agriculture or related to agricultures. The World Resources Institute, according to their study, Morocco is ranked as the 22nd most water-stressed country in the world, owing this to combination of scarcity of water, climate change, socio-economic development, urbanization, and population growth. Due to climate change, rainfall in Morocco is predicted to decline by as much as 50% by the year of 2050, increasing the risk of drought. So it's a real issue in Morocco, water management and water financing. The government was working in this area, in this field, since the last 20-25 years. The last draft that was prepared by the government, the National Water Plan 2020 to 2050, envisaged the spending of $40 billion on dams, the connection of water basins, the desalination of seawater, the integration of all rural centers into structuring drinking water supply system. So it's something which is serious, and it's something which needs a lot of money to be able to tackle these various issues. So there has been a lot of investment with regard to climate finance in Morocco. And we try to assess, in fact, the size of this investment and the share that were allocated so far to adaptation or to water. So we, roughly for the period of 2011 to 2018, we tried to define what we call the Moroccan climate finance panorama to understand exactly what's going on. And in fact, we realized that during this period, 10 billion euros were collected and toward investment for climate finance. But only 24% were allocated to adaptation projects, out of which 20% to agriculture and only 4% to water management. As you can also expect, the gap is huge with regard to need. So when you look at just through the angle of the NDC investment need for the period 2016 to 2020, we were talking about 6.5 billion euro per year. So if you compare this to the total amount of 10 billion for 8 years, it shows you the gap. So if you want, in fact, to have a better view on what's going on in Morocco with regard to water, we had various projects that were financed 100% by the government, but we saw also projects that were financed by international development banks, projects financed by AFD, our friend AFD, and GCF, funded also by EBRD, and also by us. So as a national development bank, we developed the first PPP in the desalination sector in Morocco. With this project, which is a mutualized desalination plant project, which cost, in fact, around $400 million, was put together to serve both the irrigation needs of the farmer, of around 3,000 farmers that benefit from it, and the water need for the population, and we estimate 1.2 million water users. CDG, through CDG Capital, we played a key role, in fact, throughout the process of structuring the project, the development and execution of this Agadir desalination project. We, together with the private operator, and in this case is Abengoa, we work together to respond to the call of tenders and to develop the project, which notably involve an appropriate risk allocation. And this is something which was key, because we have to deal with different type of risk related to this project. And you all know, for different phases, we have political and regulatory risk, we have macroeconomic and business risk, and we have technical risk. So we had to play with all type of engineering, not only financial engineering, but also economic engineering, and also technical engineering through our subsidiary and other type of service provider. So we had, in the beginning, we set up, in fact, an equity fund where CDG invested its own money and attracted local institutional investor into this equity fund. Second, after restructuring the project, we had at the financial closing in 2018, we took part with other commercial banking in the consortium, which provide, in fact, the necessary debt financing for this project. So it's clear that for this project, where we were talking about the objective, sorry, about the SDG number 6, but we had, through this project, in fact, had an impact not only on the number 6, but also the number 13, the number 8, and the number 17, which is the partnership, which is something key to be able to make this happen. I think just a conclusion for this type of sector, which is important into the adaptation. Adaptation is key for emerging country. So it is closely linked to the development, and resilience is something which is important. And now with the COVID-19, we saw that the resilience supersedes the performance. So we have to be resilient, and we have to integrate, as I mentioned in the beginning, the development with the climate finance. And we can make it. It is something difficult with regard to other projects that are easy, that are vanilla, as we say in our financial sector. It is something which is complex, but it's doable. We can make it happen if we are able to gather different type of investor having different risk appetite, and to at the end close something which is concrete. And this type of example, we aim at duplicating it to other type of desalination project in Morocco. Thank you.
Thank you, Hamid. This is, I really motivate you to contact Hamid to know more details if you're interested. I think this is a very interesting story. It's quite complex, but I think other finance institutions can really learn from your example. We're now moving to the other side of the Atlantic. We move to Mexico. Carlos Puente is a passionate economist dedicated to infrastructure finance, public-private partnerships, and project development for the last 25 years. In 2013, he became the Director of Water, Energy, and Environmental Projects at Banobras, where he's become committed to the financial and operational sustainability of the water and wastewater sectors in Mexico. Carlos, the floor is yours. Let's try to unmute you. You're unmuted.
There you go. I think I'm there right now.
Yes, very good.
Yes.
And please stick to the time. Yes.
Yes, I'll hurry up. So basically, thank you very much for the invitation to Banobras. It is a pleasure for us to be here to be part of the discussion. Banobras is the National Development Bank in charge of subnational debt provision, public service and infrastructure financing. We provide as a bank debt guarantees and leasing products to state and municipal and other subnational entities. We are the largest provider of financial resources for this category of financing. And we also provide lending for the private sector through project finance in PPP and public works. We share many of the features that Hamid was just talking about. We obviously support the national development plans for each administration. We provide debt financing and technical assistance for infrastructure and public service development and projects. We facilitate private equity inflows for infrastructure project development. We take risks that the market is not willing to cover. We try to close the financeability gaps in projects where social and economic value is there, but with low financial returns. And we finance projects in competitive terms for the long term. The National Infrastructure Fund is a vehicle of the public administration set up by the Ministry of Finance to promote investment mainly in PPPs in Banobras' areas of attention. And water has been one of the sectors that has been served from the beginning of its operations. We are also the largest operator, concessionaire of toll roads in Mexico, and we provide with excess revenues from the toll road concessions. We provide grants, contributions for projects and feasibility studies and advisory services. And we also provide subordinated debt, guarantees and equity for projects involving public-private partnerships. One of the main areas of focus in this administration, which came to power in 2018, late 2018, has been to embark the FONADIN in the implementation of a sustainability framework. We have been working with the Inter-American Development Bank, with World Bank, with GIZ and other technical and assistance agencies from around the world in the implementation of a sustainability unit that will collaborate with the areas like mine that are involved in project development to ensure that every project that we promote has the sustainability development goals in consideration, and always focused in meeting these sustainability goals in every project that we make. With regards to the water sector, we can say that in Mexico there are large, very big challenges, particularly in the urban context. The water public utilities operations have been very inefficient. Currently, global efficiency levels of water public utilities are under 50%. That means that from each liter or cubic meter that comes into the network, only 50% of it is, generally charged for public service through tariffs. The pressure to increase access to water and sanitation and to provide progressively better services is permanent, but in Mexico has not generally been tied to policy consistent with these elements. The local nature of water service provision by municipalities have posed many problems and challenges for rational and efficient use of water and for the use of the water, and it has constrained very dramatically the resources necessary to operate and manage the water public utilities. And to reach, we believe that to reach adequate and even acceptable levels of commercial and physical efficiency, Mexico demands to strengthen the technical capabilities and financial position of the water public utilities, ensuring that they have the resources necessary to meet the investment challenges of sustainable growth. One example, or one of the clearest areas where we have an opportunity to help and to foster this structural change is to help the public utility companies to implement sustainability and financial and operational sustainability programs to bring their finances to equilibrium. In Mexico, in the average cost of production of water is around 0.66 euros per cubic meter, whereas the tariff collected for the provision of public services oscillates around 0.60 euros. So there's a big gap between the tariff that is collected and the operational cost of the public water utilities. Another big area of opportunity, or another indicator of the large problem that we have in Mexico, where public utilities charge for these services, like I said, around 60 euro cents per cubic meter. The cost of water, of bottled water in the streets, is around 76 euros per cubic meter, and there's a large black market also, where many sectors of the population are receiving their water through tanker trucks, and this service costs around 13 times more than what the public utilities are charging. This just basically helps us, or indicates the availability of resources from the population if they receive an efficient service and if they receive water with quality. We believe that we can, through Banobras' products, close this gap and help the public water utilities to provide the water and become sustainable in an operational sense. In general, the Banobras has been very successful in promoting drinking water and wastewater treatment and transportation projects, but we've been unsuccessful in fostering these projects that promote the financial and operational sustainability. I would like to stress that we are currently recently launched a bid in Los Cabos, one of the most important tourist areas in Mexico, for both a desalination plant and a sustainability and operational program. And I believe this is going to be a very good example for us to replicate in the future. In general, we have promoted over 31 projects in the water sector with over 63 cubic meters in total water flows involved. We have provided close to 350 million in grants financing, generating close to 780 million euros of total investments. One of the things that we have talked about is the need to promote structural reform that helps us to increase the pipeline that we have of projects that we have and that we are promoting. And an important question is whether there are examples of political reform in the water sector led by the public development banks that can lead to structural changes and gain traction across the different sectors and levels of government. In the end, I think that for Mexico, the main challenge is to promote structural reform in order to provide a legal framework conducive to breaking the vicious circle faced by water public utilities in the current environment. We need to provide strong tariff structures and increase, like I said, the capabilities and efficiency requirements that municipalities face. Thank you very much for this space.
Thank you, Carlos. I'm so sorry. There's definitely a problem. So we only had 2 PowerPoints in this session. One was for Carlos and the other one is from Juan. And somehow this is a complicated system and we were not able to upload the slides. I apologize for that, but we will share all the PowerPoint with the participants of the session. Thank you.
Excellent. Thank you.
Thank you for telling us about, some of your critical challenges. We come back to the chicken and the egg, the governance and the attraction of investment. So finally, we come to our third speaker of the second set, and we come to Europe. I would like to introduce Juan Baufil. He's a senior water engineer in the water management division of the European Investment Bank. And he has more than 20 years of experience in the water sector. He manages water-related projects within the EU, Africa, and Latin America, in close collaboration with many other of the financial institutions also present here. Juan, the word is yours.
Okay, thank you very much. Good afternoon and good morning, everyone. Thank you very much for inviting the EIB to this great event. We are delighted to participate, and congratulations for the organization. I don't know if you mentioned that our slides are not also in the system, or? Okay, great. That's great. Okay, so for those who might not know the EIB, the European Investment Bank is the EU bank with more than 60 years of history, mainly fostering European integration, promoting the development of the EU, and at the same time supporting EU policies in over 140 countries around the world. And the way we do this is financing projects and investing in funds. As you can see in the slide, during the period, well, this is actually from 2019, but during the period 2015 and 2019, the EIB loan amount was more than 340 billion. Last year, these are the numbers in the slide, in 2019, the bank signed more than 63 billion euros in loans for projects and more than 10 billion euros in funds. But the EIB had the commitment that at least 30% of the finance has to be dedicated to fight and to improve the resilience to climate change. This is going to improve, as I will explain at the end of the presentation. Can you, next slide, please? So out of these figures, the water sector is very important as part of our objective of environment improvement. During these 5 years, the bank has financed almost 15 billion euro in water projects all around the world. As you can observe from the chart, a significant proportion of the water lending took place in the EU, as you can see by the blue part, by the blue section of the chart. However, the lending outside the EU is starting to be now more significant in the last 2 years, and the main reason for this is that the reason for that and for the decrease in the water sector lending that we can see after 2017 is very simple. It's because of Brexit. The water sector in the UK was a major borrower, so Brexit had an impact on that. Nevertheless, the EIB is still financing a significant amount in the water sector, over 2.5 billion, more or less, per year globally. Can you click the next slide, please? So if we look at the lending outside the EU in the last 5 years, we can see that the geographical distribution is very broad. A significant proportion took place in Africa, Caribbean and Pacific region, what we call ACP states, and the Mediterranean countries. Also, Latin America was very present in our lending. Can you click next slide, please? On the contrary, what we may think, and we may believe, the SDG has not been fulfilled completely in the EU. There are still some gaps. Most of it is related to the sanitation, with population still not covered by collection or treatment. According to a recent report from OECD, the investment gaps in the EU are more than 25 billion euro in order that all the EU reaches compliance by 2030 with the Urban Wastewater Treatment Directive. In relation to the drinking water supply, the gap will be almost 36 billion, which is much less, but it's still a significant amount. I understand, and we understand that these investments are not comparable with other regions, other continents, such as Africa and Latin America, and their needs there are also very important. However, we consider in a close future, something that will happen, and we believe it can happen, is that the role of the PDBs in the EU will be also very important, still very important, considering that the next programming period of the EU might bring less grants, investments, even though they will be important, but we think it could be less. It's still not known. So PDBs can have a more significant role in helping to achieve compliance. Can you pass to the next slide, please? So the EIB has several ways of financing projects, all the institutions that we're talking before. We have direct loans to the promoters, or we can have something called intermediary banks, or loans through intermediary banks. In this case, these intermediary banks will be channeling the funds to the final beneficiaries, that can be utilities, municipalities, SMEs, etc. In many cases, these intermediary banks are public development banks, and their role is very important. The EIB cannot finance more than 50% of the project cost. This is something that we have, others don't have it, except in some cases of emergency, for example, an earthquake. So we are always partnering with other institutions and government, which is good, because this is also fostering the financing from others. We have some recent, as you can see in the slide, we have some recent examples where we collaborated with financial intermediaries in the EU. CDC, Caisse de Dépôt et Consignation in France, and NWB, Netherlands Waterschap Bank in the Netherlands. The CDC operation in there, the EIB is lending 500 million for projects in several sectors, but with a significant proportion of water projects. And in the case of NWB, the loan is financing the water boards in the Netherlands to invest in projects related to water management. So we understand that the main benefits of using financial intermediaries is the impact, because the financial intermediary is able to reach a high number of final beneficiaries, and at the same time making sure that these are eligible and that the projects are implemented according to higher standards from a social and environmental perspective, such as the EIB's environmental and sustainable, environmental social standards. Sorry. Usually the project cost is low, under 25 million euro. So it means that the funds are reaching a higher numbers of final beneficiaries. Another benefit is that the financial intermediaries can pass the advantages they obtain from us, from the EIB, in the financial conditions to the final beneficiaries. So one of the advantages could be, for example, the loan maturity. It's not in the case for France, but in others would be the case that commercial banks can only finance up to 10 years of loan maturity, and we can try to reach the loan maturity the same or to match it with the economic life of the assets. Public development banks are very important for achieving SDGs, and I think and I believe that more important for SDG 6. And the public banking intervention is critical for covering things that will not be covered by commercial banks. For example, incorporating the externalities such as public health or avoiding environmental pollution. And this is even more important now in the context of COVID-19 pandemic. As you are aware, WHO has declared that investments in water and sanitation are critical in order to fight against COVID-19. Achieving SDG 6 is very important, very, very important, but we believe that not at all costs, meaning that the public institutions cannot forget about other critical objectives that need to be fully considered when investing in water projects, like climate change, circular economy, gender, which is in many cases forgotten, and, for example, protection of the oceans. In the water projects, if the water projects are prepared and implemented correctly, they can have a significant contribution to give solutions and to increase resilience against these crucial problems, such as climate change. And I'm going to give two examples. For example, when we are treating the wastewater in proper wastewater treatment plant installations, we are reducing the methane emissions. And also, if we reuse the biogas and the sewage sludge, we are also reducing these emissions. Another example would be, for example, in the water supply systems, making them more resilient by reducing the non-revenue water, which at the end of the day, it's energy losses. So the EIB committed last year, this is what I mentioned at the beginning, the EIB committed last year to raising the EIB's annual financing for climate action and environmental sustainability to more than 50% of our business volumes by 2025. Up from now, as I mentioned at the beginning, only 30%. So we are pretty sure that the water sector can surely contribute to this, and PDBs can play a significant role. So we are indeed welcoming we're welcoming the launchment of this initiative and the call for a water finance coalition. I'm happy to answer any question, and thank you very much for the time.
Thank you, Juan. Thank you, gentlemen, for the second part. We're now moving to the third part. Then we will bring you back for the Q&A. And there's already quite some interesting questions for some of you. You can respond quickly in the questions. So I would now like to bring on stage the final set of speakers. They're going to make much shorter interventions. So we had the context. Then we had the examples from the public development banks in water. And now we will discuss what is the role of the regional and the multilateral development banks? What type of support are they providing to the public development banks? So we have on stage Jennifer Sarah, Julian, Celine. I would start by introducing our first speaker, Jennifer Sarah. She leads the World Bank Water Global Practice and oversees a portfolio of over $30 billion in water-related investments. She manages the multi-donor trust funds and global partnerships to support an integrated approach to water security with a focus on sustaining water resources and delivering services that build resilience. Jennifer Sarah.
Thank you so much, Katarina, and hello to all the colleagues. It's really great to see so many partners on stage together, and also to see so many people participating and sending in the questions. Excellent questions. I want to deliver 3 key messages. Much of what has already been, just to reinforce what's been said already. First of all, COVID is showing us that investment in WASH is now more important than ever. Number 2 is we need to use existing resources much, much better. And we also need financial leveraging across the public and the private sectors. And 3, and probably most importantly, we still need to get the basic fundamentals of sector reform right. We need to focus on service delivery, sustainable services to all, and not just on building infrastructure. So as Katarina mentioned, at the World Bank, we have about a $30 billion ongoing portfolio of water and sanitation projects throughout the world. And we're very much committed to raising the critical message of linking financing to achieve SDG 6, whether it be public financing or private financing. We really believe that financial leveraging is critical. In addition to increasing resources from development banks, closing the financing gap for the water sector will require private financing, and including from domestic sources. Multilateral development banks have committed to collectively increase the amount of private financing they mobilize by 25 to 35%. At the World Bank, we call this Maximizing Finance for Development, or MFD, and it's an initiative to crowd in additional sources of finance by changing the way development banks and governments provide finance. At its core is a drive for unlocking investment and finance in emerging markets and developing economies to leverage the private sector in sustainable ways that bolster scarce public resources. But most importantly, while we need to mobilize additional public financing for the sector, it is hard to advocate for more public funding in the context of the severe mismanagement and inefficiencies in the sector and the resulting lack of creditworthiness of many of our service providers. Helping water and sanitation service providers to improve their efficiency and move towards financial viability needs to be addressed in a holistic manner. It requires putting in place the governance, institutions, and regulatory mechanisms that hold utilities accountable. This is not only important to attract private finance, but also to protect the balance sheet and risk ratings of public sector lenders, including some of the development banks we've heard from today. In the World Bank, we host the Global Water Security and Sanitation Partnership, and this provides us as a think tank to really look at, do deep dives, analytical work to understand and identify evidence that can help us propose solutions to the financing gap. We just recently launched an initiative called Utilities of the Future, and it's helping service providers become more efficient, reliable, inclusive, transparent, resilient, and sustainable. While it may seem daunting, there are actually some relatively straightforward things that we can all do to improve services and help utilities become more creditworthy. We just did a quick deep dive into our IBNet database, and we looked at nearly 2,000 utilities in middle-income and low-income countries, covering 630 million customers in 73 countries. And we found that without any improvements, only 31% of service providers globally would be able to service debt. 31%. Only 1/3 of current service providers would actually be able to take on and assume any debt they could service. However, there are quick fixes. Just by collecting all the money that is due to them under an existing tariff structure with no increase, the number of utilities which can generate more than their needs to fully cover operation and maintenance costs with a 20% surplus nearly doubled to 35%. So if you just collect the money that's owed to you, you can actually increase your revenue and meet your O&M obligations to have additional funding. If non-revenue water could be dropped by 25%, the additional revenue would mean that suddenly 60% of service providers could conceivably service debt. And if there is an increase in revenue, 10% increase of revenue, the number of service providers who could tap the market also jumps up to 70%. So there are quick wins. We know what to do, we just need to do it, is what we say. So in that context of achieving efficient service providers, we see that there's different ways that we can channel public and private finance into the sector. And I think we need to be much more creative, and we enjoy working with our friends in OECD Financing Roundtable and other colleagues in this extent. First, we need to look more broadly at the pool of borrowers. Most of us think of borrowers only as utilities. But the pool of potential debtors for water and sanitation services is quite diverse. It could include even households who might mobilize financing via microfinance institutions. And it also could include municipal governments that may want to issue bonds to tap into the savings from pension funds and insurance companies. And they have long-term liabilities and they seek long-term assets like water infrastructure. So it is an attractive investment to long-term pension funds as long as we can actually ring fence and protect the investments. So debt finance can also be ring fenced through carving out bulk water supply or wastewater treatment as well. We can also look at a large array of tools available to help crowd in private finance and public finance. So we mentioned the bonds in Uruguay. 3 decades of public support from the World Bank helped, and other development partners, helped transform the national utility from an inefficient water and sanitation service provider into a really well-regarded public utility that now provides almost universal access to water and sanitation. They've been able to issue bonds in the market. They've done several issuances of bonds starting in 2017. And thanks to their favorable credit rating, the bonds were successfully subscribed without the need for support from any other development institution. In Kenya, we've been working for many, many years, and we know there's a lot of liquidity in, time's up, okay, in the private sector. So we have lots of examples. I won't go through them all, but I do want to also mention that we're doing a lot of work with Banobras in Mexico. We have an excellent example in Oaxaca. There were several questions about how do we actually tie institutional financing to institutional improvements. It's a very, very nice project there with a $50 million investment that's disperses against results. So if utilities improve their performance, that's how they can access the money. So let me conclude that to meet the SDGs, development banks and other financial institutions will need to increase resources allocated to the sector, but we need to help invest these resources much more efficiently. And we stand ready to work with all of you to take this agenda forward. Thank you.
Thank you, Jennifer. What I like in all of your presentations is that you all talk about the immense number of challenges, but then you always come around with some positive examples of how you managed to make it work. So that's really motivating to hear. So our second speaker for the last part of the panel is Julian Suarez Migliosi, who's the Vice President of Sustainable Development at CAF, which is the Development Bank of Latin America. He's responsible for shaping the implementation of CAF's agenda on water and sanitation, health, education, urban development, inclusion and gender. Here's the gender component. Thank you. CAF, natural capital and climate change. Julian, the floor is yours.
Thank you very much, Katarina. First of all, I'd like to acknowledge, of course, the French Development Agency and other partners for making this call for action possible, with the hope that it can trigger a deeper and more effective cooperation among PDBs on the road to achieving SDG 6, and also on something that came out here with Jill's intervention at first, on the road to the Paris Agreement, understanding the interlinkages and taxonomies between SDGs and the Paris Agreement. Now, nonetheless, such relation, and given the time constraint, I would mostly refer to water and SDGs and share some understandings on how PDBs can contribute to boost the water finance for wash services. And I'd like to start by rephrasing what Katarina mentioned, that is that despite the progress made in the last 2 decades, the challenges are huge. We roughly invest in wash 1/3 of what we should in order to close the gap by 2030. Now, 3 dimensions which reinforce each other in which PDBs could play a more active role to boost water finance. First, the direct one is on mobilizing additional financing. That is, to bridge the gap, financing will still come from traditional sources, subsidies from governments, loans from IFIs, donations from philanthropic entities, utility cash reserves. But in order to bridge the water gap, we need to be able to develop innovative financing mechanisms that be effective in channeling non-traditional sources of funds, especially attract funds from commercial banks, private investors interested in green and water resilient bonds, or even on equity investments. And PDBs here have a double role to play. First, by contributing to developing those innovative instruments. And second, by contributing to increasing certainty trust is what Katarina said at first, and that's reducing the sector risk aversion. How? Well, by acting as an anchor investor, and second, by developing and disseminating knowledge and advocating towards enabling conditions. And in this regard, let me share that CAF leads the task force on financing water within the World Water Council, together with FAO, SABESP, TNC, Equafed, and others. And the activities of this task force on the road to Dakar mainly focus on the development of analytical work on blended finance and nature-based solutions to overcome the barriers to financing water. Second, and Caitlin from OECD pointed that out, PDBs can play an active role to enhance regulatory frameworks to motivate performance within the water sector, and thus address the double challenge of investing more, but also investing and operating better. For instance, non-revenue water in some developing countries account for more than 40%, what implies an increasing concern under a scenario that combines both a growing water scarcity threat and a situation in which most water utility companies do not even cover operational costs. So in this regards, and in order to address the double challenge, PDBs could further support the development of an enabling environment for the water sector by contributing to address some of the foundational issues that affect the water sector performance: insufficient economic and technical regulation, non-independent steering committees to conduct public utilities, undeveloped local financing markets, and something that was said as well, the lack of accountability and transparency in service provision. Third, and I will finish with this, PDBs can contribute to better planning of water investments. Bottom line here is there are no sufficient bankable projects that are ready to be implemented, and PDBs can contribute to the development of such proper bankable projects. At CAF, in the last decade, we have financed over 70 water investment projects in the last decade that have mobilized more than $10 billion. My Water, Mi Agua in Bolivia is an example of those, with 4 rounds of financing from CAF for $385 million have had an impact of including more than 2 million inhabitants with new safe water connections. But we could do more where there are more available bankable projects ready to be implemented. So in this regard, I'd like to share an example of what at CAF we're doing. By the end of 2018, we launched a water project preparation facility. Already it is in its 3rd round of implementation, with commitments of about $15 million of non-reimbursable funds, basically to work on the project readiness of water-related projects that in the end will be financed for the implementation phase by CAF. And we're talking about more than $600 million in CAPEX. And it is worth mentioning in this regard that one of those studies for the final design of a wastewater treatment plant in Ecuador is being co-financed with the French Development Agency, and this showcases a great example for further joint cooperation with other PDBs. Final message: understanding it is time to act. Our commitment as PDBs should be to scale up cooperation. None of our banks can, by itself, make the necessary difference. We need to establish effective and pragmatic cooperation to join efforts and make possible our common goal towards the 9th World Water Forum. Thank you.
Thank you, Julian. And I think you have already answered some of the questions that the audience was putting on the chat, especially on this focus on just focusing on CAPEX, on infrastructure, and not on operation and management. And congratulations, I mean, if I heard correctly, a 15 million project preparation facility, that's yes, quite something. Thank you for that. So we come to our final speaker for the session. I have the pleasure to introduce Céline Robert. She is the head of the Water and Sanitation Division of the French Development Agency since 2019. She worked previously in Cambodia, in Ghana. Her key expertise is the management of urban services. But most important, together with her team, she actually has made this session possible, pioneering a much needed discussion on the role of public development banks in the sector. And she will tell you more about what are the plans for this. Céline, the word is yours.
Thank you very much, Katarina, and thank you to all participants and especially to our speakers for their very highly valuable contribution. We are very happy to have you here today. If I try to sum up what I've heard, I would say that this session reminded us rightly that the water and sanitation sector is highly capital intensive, and it requires huge investments if we want SDG 6 to be achieved and all other water related SDGs as well. And we know that government financing, we know that development aid financing are not at scale to reach these objectives. So we know that we have to mobilize all sorts of financing, whether public or private. I think we also all agree that for the sector to access financing, it is critical to have an appropriate enabling environment that is put in place by the authorities of the countries. And providing support for that is at the core of AFD strategies, and it's also at the core of many IFI strategies. As it was rightly said, for example, by my colleague from the World Bank, Jennifer, improving efficiencies of service providers is obviously key. And in that context, where we have huge needs, a huge financing gap, where we have the need to increase the enabling environment, I believe that the international water community has focused quite a lot during the last year on working to bring private and commercial finance on board. And this is absolutely a valid ambition, of course. But I also believe that the role to be played by PDBs, and especially the domestic ones, as the role they have to play in this path, whether to finance water and sanitation investment or to shape incentive for the sector to attract all kinds of financing. I think this role has not been that much looked at. It has a little bit been neglected. And I think this is what we want to change today. This is what we are trying to start working on that a little more. So what do we know now as we stand on the role of public development banks, and especially the domestic and national ones? We know that historically in many developed countries, they have played a crucial role in financing the water and sanitation investment. This is the case in France, this is the case in Italy, this is the case in the Netherlands. And as it was said also by one of the speakers, they will have, it was our EIB colleagues, I believe, they will have to play a role in the future to renew all this infrastructure. And PDBs, and including the domestic national PDBs, have demonstrated that they can raise funds in an inexpensive and sustainable way, and that they can provide this patient capital we are talking about and that we need in the water sector. So that's the first thing we know. We know that currently in the emerging and developing countries, the role of national development banks varies a lot among countries. And in some countries, as Mexico, for example, they are playing a big role. And in other countries, there is no national development bank, or they are not that much involved in the water and sanitation sector. And what we do know as well is that us, the international finance institution, the multilateral regional PDBs, we are providing some funds to national and domestic PDBs. Mostly, we are doing that mostly through climate credit line and through municipal credit line for local development. And based on this observation, I see several opportunities for us. Firstly, there is a room for greater exchanges among PDBs, multilateral, regional, national, and this could be developed so we have a better knowledge of good practices, of successful experiences, because actually we can still learn, and this would help to mobilize more financing for the sector. Secondly, I do believe that governments could be sensitized and encouraged to use more the potential of their national public development bank as a tool for financing the water sector. There has been quite some work done in the previous year in creating ad hoc pooling mechanism, and maybe not that much work on using PDBs for that purpose. And I do believe that platform like SWA or institution like the OECD could play a role in sensitizing government on the tool they have at their disposal or that they could build. And thirdly, I see that there is complementarity that we can develop between us, I'm talking about the multilateral international public development banks and the national ones. If I echo one point that was raised by Carlos from Banobras, I think that when national development banks finance a significant part of the water investment, they do have the strengths, they do have the legitimacy to lead the conversation on the very much needed institutional reform in the water sector. And we, the multilateral, regional, and national banks, I think we should be allies in working with government on developing such an enabling environment. And I also see a potential when we work together, IFIs and national PDBs, that we manage to make the water and sanitation sector more explicit in the credit line we provide, which are broader credit line about climate or local development. And finally, the last opportunity I see is that we have said, and rightly said, that water is at the core, is a core issue at the cross of many SDG, and it is core to achieve all climate and biodiversity agreements. So it should certainly be considered more as a transversal topic in the strategies of PDBs in their decision, including financing decision on other sectors such as agriculture or energy or urban planning. So to conclude and to work on all these opportunities, to move forward in order to increase the involvement of PDBs in the water and sanitation sector, I'm very pleased today, and on behalf of AFD and together with our partners that are here today, the World Bank, the European Investment Bank, CAF, and Sanitation and Water for All, I'm very pleased to launch today this call for action to build a water finance coalition. This initiative will rely not only, but it will start by relying upon a research study that is currently financed by AFD and led by IRC and Katarina Fonseca that is here with us today. This study will aim at finding out the role and bottlenecks of PDBs in financing the water and sanitation sector. It will make a focus on two regions, the Mediterranean region and the Latin American region, and it will be completed by next April. And in link with this study, what we intend to do is to create a group of peers, a group of PDBs to share good practices, to share recommendations, based on this research, to define tools that could help us to invest better and more in the sector. And what we plan is to present the results of all this work at the World Water Forum in Dakar in 2022. So colleagues, again, thank you for being here. Please do join us if you are interested in playing your part in this Water Finance Coalition. Thank you very much.
Thank you, Céline, for the excellent summing up and for launching the call for action. Please stay on stage. I would also like to bring to the stage Kathleen from OECD and also the other colleague from AFD, Olivier Crespi, very much involved in setting up this session. I see that we have 10 minutes to end the session, but I want to make it so we will go just 10 minutes over if it's possible. We have this first panel with 1 or 2 questions, and then our national development banks for another set of questions. So please, Olivier, would you have 1 or 2 questions for our panel?
Yes. Hello to everybody. We received various questions, which I try to summarize in just one or two. And so the question would be, how can public development banks and domestic development banks cooperate between themselves in order to play a role in improving the water sector governance, enabling environment and sustainability? And how could they be together drivers of public policy reforms? This would be the first, the big question for this panel.
Who would like to answer? You have to raise your hand, or because yes, Jennifer, go ahead.
No, and thank you for that question. I answered a few other questions, but I can take the opportunity just to provide the example in Kenya of how public development banks, including the World Bank, can work with the domestic private sector. So we noted that there's a lot of liquidity in the sector, in the private sector in Kenya. But of course, investing in water is seen as very risky for banks. So what we did for many years is that we were helping utilities move towards commercial finance by supporting the changes to the legal and regulatory framework with the government to clarify the roles and responsibilities. And like I mentioned, ring fence revenues where possible within the utilities, helping utilities to be corporatized, but at the same time supporting local banks so they became more familiar with the water sector, and they knew how to do shadow credit ratings, and they knew how to assess projects. But then we also put in place, and this is where a public bank can come in to leverage private investment, is by having some kind of mitigating risks, that we can have some kind of credit guarantees and subsidies, well-targeted subsidies on output-based disbursement on getting results. So, you know, it's bearing fruit. We're seeing commercial banks are now lending to the sector, and there's a project pipeline in place in Kenya, and there's a recently established Kenya water financing facility. So there's a good example there. Thank you.
Thank you, Jennifer. Anyone else? I was trying to bring Julian back on stage. Sorry, I'm cancel.
Katarina, I can jump in quickly.
Please, go ahead.
Okay. Well, I mean, I think this question on cooperation is a really good one, and I think actually we heard some good examples of cooperation across different banks working together on issues where they can join forces. I mean, if I could just reflect maybe from some of the work that we've done at OECD on blended finance, this question of cooperation actually pops up quite a lot, because you have a number of different development finance providers, donors active in specific countries, specific markets, and we see that when there's a good cooperation there, there's more possibility to avoid kind of inadvertently potentially crowding out opportunities for commercial finance. When you see good cooperation among the various concessional finance providers. I think the question, though, is also around how can cooperation help to support the enabling environment, which I think is really important. It's one of the fundamental things that we're focusing on in our work on financing water at OECD. And we have had the experience of doing several policy dialogues with countries. These are long-term engagements with countries where we look at the policy settings, we look at the institutional arrangements, and of course, make some kind of diagnosis and recommendation about how they can be strengthened and what that can mean for then attracting investment, and also making sure that the funding that's coming in is well spent to deliver benefits. And you know, what we've learned from that, I suppose others who are involved in those kinds of efforts also have a similar experience, is this is something that takes time. One thing we can observe when we're discussing with financiers, you know, in the projects of the Roundtable and other work, is that oftentimes finance providers find that they might not have really the incentives to spend that time and also resources to really invest in the enabling environment. I think there are plenty of great examples out there, but I think the question is, how can that be done more at scale, and building on the cooperation among various actors who are supporting utilities, supporting governments in improving the enabling environment, being willing to spend the time and the resources to do it, and to hopefully find also financing opportunities at the end of that experience. I think the cooperation piece is an important one. So I'll stop there.
And I don't know if, Julian, you would like to add on this. So.
Very briefly, thank you very much, Katarina. At GAF, I will just say, we have cooperation with many international PDBs at different levels, AFD, KfW, the World Bank, but also with local PDBs like PISA in Argentina, BNDES in Brazil, BEDE in Ecuador, and many others. And we also have good cooperation with the 3 climate funds with interesting projects on water and climate resilience, right? But our effort here is to consolidate our alliances and cooperation with international PDBs, and also to deepen the cooperation with the local banks. And for instance, we've started a very interesting project in Bolivia with a local microfinance institution to enhance sewerage connectivity in projects we have in Bolivia. And I guess that's an example that we could replicate. I'll stop here.
All right. Olivier, so do we stay with this panel? Well, I see we still have 4 minutes left, so I think I'm going to ask you, shall we bring our national...
I think so. We should switch panel to keep the timeline.
All right. Thank you. Thank you very much, Jennifer, Celine, and Julian. I would like to bring on stage Hamid, Carlos, and Juan. While we get set, I'll put another slide. Olivier, go ahead with the question.
Yes. So the question for your panel would be, we received various questions on the nexus between water and sanitation and water for agriculture, but also on the nexus between water and climate adaptation and mitigation policies, water and biodiversity protection. How can, in your opinion, how can synergies with these other subsectors or these other policies agenda could help to close the water financing gap?
Who would like to start? Juan.
I can start. Okay, these are 3 topics that are really relevant for us now. In particular, there's something ongoing called taxonomy. I don't know if you heard the term, in order to declare what's eligible in terms of what's substantially has a substantial contribution to several objectives. One of them is climate adaptation. One of them is climate mitigation. And all the activities are being screened. Some of them are the water activities. So water will have a significant contribution, and water per se, the water sector. Also, agricultural use of water is also being studied, and in the same analysis. So of course, agricultural use is the most relevant in this kind of in this sector, comparing with the water supply, for example. All this is being put in a box, and we will come up with a list of eligible activities that will make eligible for the financiers in order to be catalogued as in the taxonomy as substantial contribution to several objectives. This work is being done now, and it will be finished very soon. It will finish by the end of 2021, and this will for sure put a line and mark the path for what can be eligible or not in the water sector. So the nexus is there. My answer to your question is the nexus right now is in the taxonomy, and this, because it will not be applied only in the EU, it will be applied, this taxonomy work is done by the Commission, but it will be applied all around the world. So that will be the main nexus that I will call now.
Thank you, Juan. Carlos?
Yes, very briefly, we are collaborating with the National Water Commission on several projects that they are implementing, particularly one to do telemetry and quality measurements at the national water bodies and aquifers. And that's a large-scale project in Mexican terms. It's around 5 billion pesos. And
sorry, can we bring in Carlos? You're back.
I'm sorry. So basically, as part of our sustainability framework strategy, we are trying to incorporate the resiliency and the climate change elements into the evaluation of our projects. And like I said, we're collaborating with CONAGUA, the National Water Commission, on the telemetry project as a pilot in order to implement these principles.
Indeed, and this would open a whole discussion on taxonomies and the trade-offs, which I know. So, what is scarcity or efficiency in the energy? And I know that that was also the case of Morocco. So, the taxonomies give us something to where is what's ticking the box, but not how to solve some of these trade-offs. I don't know if Hamid, you would like to have the last words. Go ahead. You will need to unmute yourself.
Sorry. Yes. The subject of taxonomy is it's equivalent to the subject of language. In fact, we have different types of taxonomies. Mentioned the taxonomies of I think by the European Union, EIB. Do you have also taxonomy from Japan, from China, from Netherlands? So I think sometimes we are lost. And during the COP22, I recall, as I was member of the scientific committee when it was organized in Morocco, the subject of adaptation was key, and we had to define exactly what we mean by adaptation. And it was not an easy subject, plus the fact that how to measure. So the metrics that you put. It is difficult, but I think we can progress in this subject. We should avoid, as far as I'm concerned, kind of perfection in the taxonomy and in metrics, because we have in this area some urgency and project that we need, in fact, to get them finance and to progress. So I think I don't know how we say it, but we say that sometimes le mieux est l'ennemi du bien. So we have sometimes to satisfy with something which, even if it's not perfect, but there is clear path, in fact, in getting things done. I just want to say 2 words, if you allow me, Katarina. So we mentioned that for adaptation we have a subject of bankable project. We have a subject of how we can do things fast. We cannot avoid for this subject what I call complexity, i.e. having different type of actors, different type of stakeholders being involved. And we have to learn to deal with it, because I believe it's the best way to move forward. I think we have an African saying who says, for example, if you want to go fast, go alone. If you want to go far, go together. But I think we all aim, in fact, at going far and fast. And with the coalition that was being set up, we hope to succeed in doing things together with different type of objective for each member. And we are member of IFDFC since 2011, and I think we learn by interacting with other type of international, regional development bank. And also we have, for this type of issue and subject, is also we have to be hybrid, in the sense that yes, we are a national development bank, but we have to bear in mind that we need to understand how private investors work, what they need, what's their concern, to be able to structure initially the project, taking into account their need. And we cannot wait altogether, waiting for a project to be ready to become bankable by chance. We have to really bring some skills, new skills, in order to be able to deal with this complexity and end up structuring something that is sustainable. And the last point is climate finance. I think it's something which is important, but to make it sustainable, it has to be rooted in the local market. You have to have local development bank, commercial bank, local investors involved in financing this type of project. And this is key for the future. Thank you.
Thank you, Hamid, for those final wise words. I would like now to give the final words to Celine from IFD. Please come on stage. And I would like to thank you all very much for staying with us. I would like to thank our speakers, our audience also for listening. The last words to Celine. Please come on stage.
I would like to thank you, Amit, because your last words were very good. I think this is what we need to keep from this event, this intention we have to work more together. Institutions that are working at different levels, but we are not talking that much together, and this is what we want to launch today. And so thank you very much for being here. There is an email address on the screen. So if you want to contact us to join us in thinking and exchanging on how we can improve the role of PDB in the water and sanitation, please do. Thank you very much and have a very nice evening. Bye-bye.
Thank you. Bye-bye.
Bye. Thank you. Keep the WhatsApp group alive too, please.
Yes, and for our audience, you see an email on the slide. If you want to have more information, please, we just set up the Water Finance Coalition at afd.fr, and you will be getting, we will do something about at least this knowledge sharing and partnerships. We will keep this discussion going. Thank you, everyone. We're going offline. Bye-bye.